One of the things that we're going to do here today, it is now 2:29, and we're just going to briefly recap after hours market S&P 500 daily index. And the daily index ran, it crumbled and sold. We got up to the green line, which was a great rally from the 1075, and we rallied 200 points up. That is your Christmas rally. Then a week ago you had Greece, and then today you have, well, here's what happens with the third largest economy, such as Italy. And that 99% of the stocks in the S&P 500 were down. And we've sold through it. We've come down here to the daily 100-day simple moving average. 99% of the stocks in the S&P, starting with Alcoa, A through Z, are all red in the net change. That is a daily haircut. Look at the list. Look at it. Look at this column. Look at this column. The net change column. Look at the net change column. Look at that sea of red. That is the Italian bond problem, above 7% and breaking higher. That is about the third largest economy over there in Italy having a problem. They have to fix it, and they're going to have to do a great TARP bailout overnight. So the volatility is increased. It was a distribution. It surely wasn't a buy, and it caused that much of the S&P 500 to sell off. Net change, it's all red. Is there even a green one? I'm going up slowly in the net change column of the S&P 500. I don't see any green. It's in the net change column. It's all red. Now, having said that, here's the weekly chart now. Let's get it up here, weekly, okay? Here's that daily reversal, but here's the thing. This is a daily reversal to the daily moving averages here. 100-day, 20-day, it's below it. 10-day, it's so below it. The 200-day, it couldn't stay above it. Over here, though, the most important bullish part of the trend before the Italy overnight and this morning is that you pulled back to the 20-week moving average. This trend line that I have been showing all along, which was our major resistance levels here in this weekly chart, is going to be that support level here at that trend line. And we talked about this yesterday after the close. And we talked about the fact that when you got up above that 50-week moving average, that was a pretty good bull run from 1075 to the current top with the double weekly. Last week this was Greece, okay, and this week it's Italy. Now, having said that, is where does the U.S. get involved, and what the U.S. market is outside of all of this is that this trend line is going to have support. The red line is the 20-week. We're below the 50-week. Yes, it qualifies 1, 2, 3, 4, 5 weeks above the rising 10-week, which says that the bear bottom changes. However, within that change, you've got the worldwide financial crisis in play. So basically, what I have said, even though that we would get a big rally up, that a lot of the rally right now has already happened in October that you would normally see always in November and December. It's possible. The rally off of the 1075, 200 handles up, is still fairly strong on the pullback, even with the Italian debt crisis and the Greece crisis and the G20 that had met, and a lot of other things that have had their say around the world. And the markets were extremely resilient, and most of the bulls were never in the top. I keep telling you that. The thing about it is now is that if we know that this is the near-term support, because it's going to be the higher end of this weekly breakout bar. So if we do end up coming down here to the 10-week moving average and the 100-week right here, this is going to be part of what we had originally had resistances right over here in this 5-week area. And we came down and we made the lows. That would be the support number 2. The thing about it moving forward, and this is the time of year when stocks are to be bought and sold, but they've already ran quite a rally, and now you got the worldwide debt crisis in play. and the market's been extremely resilient through the Greece crisis last week. And the problem is, though, that technically this bar, the high of today, remember that the S&P is down 46 handles, but this bar, this high, is lower than that high, and this is a double top within the financial crises in the last 2-week period. Now, we recovered last week in the Greece still and got back above here. And yesterday, we were above that 50-week moving average. Now we're going to pull back to the support level. We will inform you. Stay tuned. However, it is a bearish move. That rising 10-week moving average, if we ever do come down and start to break below 1200 here, we'll be aggressively short, because then this bottom comes back into play down in here at this 200-week moving average. And we got above that 200-week for 1 week, 2 weeks. We got above the 100-week. You got everything that you would want. Just remember, people are so frightened about the crisis that they never were involved in the 4-week rally. They don't start buying until the top, but it does ruin the confidence. There is no lack of confidence here at stockmarketfunding.com. Once again, S&P, 99% of the S&P 500 stocks sold off. We're at key technical levels where we're going to look for bounces and or sell-throughs, and then make the appropriate index risk management trades based on using either calls on support and or having to buy put options, because this major neckline of what used to be resistance over here, this trend line is going to come into that support. And the thing about it is, with the amount of haircut, we'll have to see what kind of news plays out overnight. Once again, MMTs and the rest of the world is, and worldwide people that are part of it. If you ever watching the videos, we get lots of people from your country and lots of people from around the world that visit us, and they visit us because we're always correct in these things. We're correct to be buyers here when no one wants to be in. And the thing about it is, we got this rally here. This was a great rally, 200 points, because it was. And it was a great upside volatility to the calendar year low here. And through all of the mess that had happened through the original calendar year lows, with that beautiful rally back up here. And that rally so far, we'll call it what it is. It's right here at this major neckline where we really broke down. Okay? And we really did break down. And we broke down right here. I will draw this horizontal trend line once again right here at this top. This is where that breakdown was to the calendar year low with the bounce, then the lows, and then this great rally. Now, we always talk about 2012 forecast, and we have that forecast. It's a private forecast for big players and or anyone that would want to get that report. You can get the SMF yearly 2012 analyzer that we use as far as systemic financial risk, good things, bad things that can happen in the earnings cycle, how these other emerging markets in developing countries and how they act and what goes on around the world. The thing that I will tell people on this special review date of the S&P on that weekly, and we're constantly always on cue. We're constantly always right on the money when it comes to this analysis. And even the professional community, unfortunately, can't make heads or tails out of anything. Oh my goodness. I hope they find their way over here. I hope that they do. The thing about it is that the bull rally had a weekly, this is still, the week is not over. Today's date's 11/9/2011, and we're at critical support levels with 99% of the S&P 500 stocks having a sell down based on the Italian debt crisis. How to manage risk, how to understand when to get off of the long side and get on the short side, and how to prepare for 2000 and calendar 12.